So, in this video, our first discussion is about taxes and tax planning. The first topic will be discussed by me and Sir John Lloyd. Lahat ng develop or mga hindi pa as in develop na mga economy, meron na talaga silang binabayaran na tax. Pero the way na pagbabayad nila ng tax is based pa lang yun sa kung magkano yung kaya nila. The design of tax system reflects on the society's views of the responsibility of government and kung paano lang sila mamuhay. Like, for example, ano ba yung trabaho nila? Kung ano lang yung tax na pasok dun sa trabaho nila, yun lang yung need nilang bayaran. Hindi yung sa pilitan na kahit wala kang work, ganun, kailangan mong magbayad ng buwis. So, sa United States, meron na talaga silang hindi pagkakasunduan tungkol sa role ng government as a producer and as a protector of the economy and its citizens. The U.S. tax code is based on the idea that everyone should help finance the government according to one's ability to pay. Changes is how everyone is defined and how ability to pay is measured have led to tax law changes that keep the system evolving. The result is a tax code that can seem overly complex and even unreasonable or illogical. However, the system is based on a logic and has a purpose. So, kung mas maiintindihan mo yung mga elemento ng sistema ng buwis, mapag-aaralan mo kung paano to sasabuhay and paano ka magpaplano gamit tong mga.
Thank you, Ms. Roldan. Now, we will discuss sources of taxation and kind of taxes. The learning objectives of this topic is number 1, identify the levels of government that impose taxes. Number 2, define the different kinds of income, assets, and transactions that may be taxed. Number 3, compare and contrast progressive and regressive taxes. Any government that needs to raise revenue and has the legal authority to do so may tax. Tax jurisdiction reflect government authorities in the United States. Federal, state, and municipal governments impose taxes. Similarly, in many countries, there are national, provincial, or state, county, and municipal taxes. Regional economic alliances such as the European Union may also levy taxes. Kinds of taxes. Number 1 is income tax. Is a type of tax governments impose on income generated by businesses and individuals within their jurisdiction. Nakadepende ang tax sa income ng isang individual. It is called progressive tax because progressive tax involves a tax rate that increases or nagpo-progress. As taxable income increases or the higher the income, the higher the tax. Income tax is used to fund public services, pay government obligation, and provide goods for citizens. The federal government and many states, as well as the local jurisdiction, levy or have their own income taxes. Here in the table, it shows the income categories which are called tax brackets. If your taxable income was between 0 and 8,025, your tax bracket is 10%. This table shows that if your taxable income is high, your tax bracket is also high. Tax is levied on income from many sources. Number 1, wages or selling labor. Number 2, interest, dividends, and gains from investment or selling capital. 3, self-employment or operating a business or selling a good or service. Number 4, property rental. Number 5, royalties or rental of intellectual property. And number 6, other income such as alimony, gambling, winnings, or prizes. Another tax is sales tax. It is a consumption tax imposed by the government on the sales of goods and services. It is a tax paid to a governing body for the sales of certain goods and services. Ang sales tax ay isang tax o na ipinapataw ng pamahalaan sa lahat ng mga produkto or serbisyong ipinagbibili o binabayaran ng mga mamamayan. Ang sales tax ay katulad ng VST or value added tax dahil sinisingil din ito sa mga supply ng mga produkto at serbisyo, ngunit ito ay isang tax na nakabatay sa pagkonsumo. na sinisingil sa pagbebenta sa end consumer na sa halip sa buong supplier o supply chain. Usually, laws allow the seller to collect funds for the tax from the consumer at the point of purchase. It is usually charged as a percentage of the retail cost at the point of purchase. Local and municipal governments may charge their own sales tax, which is added to the state's sales tax. Outside the United States, many countries impose a value-added tax rather than a sales tax. For example, nagsa-shopping ka sa isang clothing boutique and you want to estimate your total after tax before you check out. After tolling the total price of the items in your cart, it comes out, for example, $100. The sales tax in that country is 9.5%. So you would calculate 9.5% times or $100 times 9.5% is equals to your sales tax. Another tax is value-added tax. Ang value-added tax o VAT or GST, Goods and Services Tax, ay isang klase ng buwis na tinatawag na consumption tax. Ito ay kinokolekta ng gobyerno mula sa pagbenta ng produkto at serbisyo. Ito ay tax na dituwirang kinokolekta dahil ipinapataw sa presyo ng produkto o serbisyo. Ito ay pinapasa kung hindi sa mamimili ay doon sa nagbebenta ng produkto. For example, if a product costs $100 and there is a 15% VAT or value-added tax, the consumer pays $115 to the merchant or to the seller. The merchant keeps $100 and remits the $15 to the government. Another tax is excise tax. It is a tax on the production, sale, or consumption of a commodity in a country or is a tax na ipinapataw sa lahat ng produktong kinukonsumo sa loob ng Pilipinas, inaangkat man o gawa dito. Ang good example nito ay fuel, tobacco, and alcohol. For example, people addicted to cigarette or alcohol tend to purchase cigarettes or liquor even if an excise tax increases. And therefore, it is a reliable source of tax revenue. Another tax is property tax. In simple term, property tax is a tax on the value of a property. Ito ay taunang halagang binayaran ng isang may-ari ng lupa sa lokal na pamahalaan o corporation, municipal ng kanyang lugar. The tax is levied by the governing authority of the jurisdiction in which the property is located. This can be a national government, a federated state, a county or other geographical region, or a municipality. Ang real properties in the Philippines, 1% for province and 2% for the city or municipality within the Metro Manila. Ang formula ng property tax is real property is equals to real estate rate times assessed value of the property. Last but not the least, estate tax. It is different in property tax. It is a tax on the right of the deceased person to transmit his or her estate to his lawful heirs and beneficiaries at the time of death. In Tagalog, ito ang tax na binabayaran ng estate ng isang namatay na tao para sa karapatan nitong ipasa ang kanyang mga naiwang ari-arian sa kanyang mga kamag-anak. Ang estate tax ay hindi buwis sa mismong ari-arian o property tax, kundi ito ay buwis sa privilege na isang tao ipamigay ang mga ari-ariang ito kung siya man ay pumanaw. In the Philippines, 6% estate tax is imposed on the net estates of a descendants, which must be billed and paid within 1 year from the death of the descendants. Failure to file and pay within the tax deadline is subject to penalties and interest. In this table, it shows the summary of the kinds of taxes used by the 3 different jurisdictions, which are national or federal, provincial or state, and county or municipal. Number 1 is income tax, which is meron siya lahat ng tatlong jurisdiction, sales na meron lang provincial or state, and county or municipal na gumagamit nito. Next is VAT or GST na ginagamit ng national or federal and provincial or state. Next is excise tax na meron lahat ng tatlong jurisdiction, property tax na meron lang provincial or state and county or municipal, and states tax which have national or federal and provincial or state jurisdiction. Here are the key takeaways of this topic. First bullet is governments at all levels uses taxes as a source of financing. Second bullet, taxes may be imposed on the following: income from wages, interest, dividends, gains, and losses, rental or real or intellect property. Third bullet, consumption of discretionary or non-discretionary goods and services, wealth from assets ownership, assets transfer after death. Fourth bullet is taxes may be progressive, such as the income tax in which you pay proportional more taxes the more income you have. Regressive, such as sales tax in which you pay proportionally more taxes the less income you have. That's all, and next reporter po.
So, I am Reynalyn Vida, the reporter of Taxes Most Relevant for Personal Financial Planning. So, for the next slide, the income tax is the most relevant for personal financial planning as everyone has some sort of income over a lifetime. So, kapag meron kang work or kapag meron kang income, kailangan magbabayad tayo ng tax or buwis. And most states model their taxes systems on the federal model or base their tax rates on federally defined income. So, nakadepende yung pagbabayad mo ng buwis kung magkano yung ini-income mo. Kasi hindi naman pwede na maliit lang yung income mo pero yung pambayad mo ng buwis or binabayad mo sa taxes mo is malaki. So, next bullet is, while the state tax may become more of a concern as you age, the federal income tax system will affect you and your financial decision throughout your life. So, saan nga ba ginagamit yung mga taxes or yung mga buwis para na binibigay natin or kinakaltas sa atin kapag tayo ay sumasahod or kapag tayo ay may mga businesses? Saan ginagamit yon? So, ginagamit yon sa mga fund that is a fund for public services. Yan, ginagamit yun for public services, pay government obligations, and provide goods for citizen. For example, sa good for citizens, nagbabayad ka ng buwis, ayun yung mga ginagamit for scholarship, ganon. So, and then for the public services naman, like for example, mga kung ano-ano, mga tulay, mga railway, ganon yung mga, doon ginagamit yung mga buwis natin. For the next slide, we have the table entities. There are 4 taxable entities in the federal system. First bullet is the individual or the family unit. Second is the corporation. Third is the non-profit corporation. And the last is the trust. So for personal financial planning, it focuses on your decisions as an individual or family unit. But other tax entities can affect individual income. So, syempre, kung budgeted lang yung income mo, tapos magbabayad ka pa ng buwis, maapektuhan yung yung paggagamitan mo nun for daily. So, corporate profit may be distributed to individuals as dividend, for example, which then becomes the individual taxable income. And likewise, funds established for a specific purpose may distribute money to an individual that is taxable as individual income. For lastly naman, a trust. For example, trust is a legal arrangement whereby control over property is transferred to a person or organization, the trustee, for the benefit of someone else, the beneficiary. If you were a beneficiary, and receive a distribution, that money would be taxable as individual income. So next slide is the definition of the definition on the taxable individual is determined by filing status. So ito yun, mga sinasabi nating individual. Sila yung single, never married, widowed, or divorced. Married, in which case two adults file as an taxable individual, combining all taxable activities and incomes, deductions, exemptions, and credits. For the third is married filing separately, in which case two married adults file as two separate taxable individuals, individually declaring and defining incomes, deductions, exemptions, and credits. Next is head of household for a family of one adult with dependents. So when we say dependents, ito yung mga, yung halimbawa may work ka, tapos may HMO ka, yung nakapailalim doon sa yung mga dependents mo, yung sakop ng HMO mo. Something like that. Next bullet is, some taxes are levied differently depending on filing status, following the assumption that family structure affects ability to pay taxes. All taxable entities have to file a declaration of incomes and pay any tax obligations annually. So not everyone who files a return actually pays taxes. However, individuals with low income and tax exempt non-profit corporations typically do not. All potential taxpayer nevertheless must declare income and show their obligations to the government. For the individual, that declaration is filed on Form 1040. Next. So, income. For individuals, the first step in the process is to calculate total income. Income may come from many sources, and each income must be calculated and declared. Some kinds of income have a separate form or schedule to show their more detailed calculations. The following schedule are the most common for reporting incomes separately by a source. So, at yun nga sinabi ko kanina, kailangan budgeted yung yung income mo kapag gugubayad ka ng taxes. Hindi pwedeng, ito lang, minimum lang yung sinasahod mo, pero kalahati dun pambayad ng tax. It's a no-no. So, next, Schedule C, business income. Business income is income from self-employment or entrepreneurial ventures or business enterprises for sole proprietors and partners in a partnership. Business income is the primary source of income. Many other individuals rely on wages but have a small business on the side for extra income. So, ito yun, business income. Kapag may business ka, syempre may income ka. So, dun mo kukunin yung pambayad mo sa taxes. Yun. And, ayun. So, next, the tax law. Tax laws distinguish between a business and a hobby that earns or loses money. You are considered to have a business for tax purposes if you made a profit in 3 or the 5 years, including the current year. Or if you are operating as a registered business with the intention of making a profit, if you are operating your own business, you must also pay self-employment tax on business income. In addition, the self-employed must pay estimated income taxes in quarterly installment based on expected income. So, ayan, kapag nga meron kang business, ngayon, ito yung sinasabi, if you made a profit in 3 or 5 or past 5 years including the current year, kailangan mo magbayad ng income. Ay ng tax. Ganun. Next, Schedule B. Interest and divided income. Interest income is income from selling liquidity. For example, the interest that your saving account certifies of deposits and bonds earned in a year is income. You essentially are earning interest from lending cash to a bank, a money market mutual fund, a government, or a corporate through not all your interest income may be taxable. Next is dividend income. On the other hand, is income from investing in the stock market. Dividends are your share of corporate profits as a shareholder. distributed in proportion to the number of shares of corporate stock you own. Schedule SE, Self-Employment Tax. Self-employment tax is an additional tax on income from self-employment or business income earned by a sole proprietor. It represents the employer's contribution to Social Security, which is a mandatory retirement savings program of a federal government. Both employers and employees are required to contribute to the employee's Social Security account when you're both the employee and the employer. As in self-employment, you must contribute both shares of the contribution. So, for example, nito is halimbawa, when you're employed, kailangan mo magbayad ng SSS. So, it's required, kailangan mo siya magbayad nun kasi for your own good naman yun kapag nag-retire ka na. So, hindi lang ikaw yung magbabayad nun, kundi magbibigay din doon yung company, maghuhulog din doon yung company sa account mo. And meron ka din. Parang kunyari, 10% sa company, 20% sa companies, let's say for example, 20% sa company and 80% tayo. Ganon. And, ayun, social security system. And meron din kasing mga company, or meron din mga business, or work, na hindi sila hinihingaan ng SSS. Tapos, ikaw yung kailangang maghulog doon. And nasa sa'yo yun kung maghuhulog ka or hindi. Pero may mga company na gano'n. Yung, kaya nga nagkukuha sila ng mga requirements din, gano'n. Kasi, meron silang obligation doon na maghulog sa account mo. Ito na yung social security system. So, that's all my part. And for the next reporter, this is to be continued with Joshua Narito.
So, Schedule D, capital gains or losses. So, let's break down the information about Schedule D and capital gains or losses. So, what are the capital gains and losses? Capital gains and losses are the results of changes in value of things you invest in, like stocks, bonds, shares, or other assets. When you sell something for more money than you initially paid for it, you make a profit, which is called a capital gain. If you sell it less than what you paid out, you experience a loss. So, types of gains and losses. Recurring gains or losses. These happen regularly from investment like stocks, bonds, like that. For example, if your stock increases in value over time, you have a gain. Kapag nabawasan siya, you have a loss. So, one-time gains or losses. These occur from things like selling a home, and it's not an everyday occurrence, but still reported on Schedule D when you file your taxes. So, short-term and long-term. So, the tax code treats gains and losses differently based on how long you held the asset. So, for the short term, if you own the asset for less than a year before selling it, it's considered short term. So, short term gains or losses have different tax rates than long term compared to long term. For the long term, if you held the assets for a year or more before selling it, it's considered long term. These also have their own tax rate. So, may sariling tax rate yung short term and may sariling tax rate yung long term. So, the importance of keeping records. So, it's crucial to keep good records when you invest in things like stocks, property, or equipment. You should note that date when you bought them and how much you originally paid. So these records helps calculate your gain or losses when you eventually sell them. This original purchase price is called the cost basis. So, Schedule D is a part of tax paperwork where you report your gains and losses from investment And it's important to know whether these gains or losses short-term or long-term because they are taxed differently. So keeping accurate records when you bought your investment and how much you paid for them is essential for calculating your taxes correctly. So next slide, let's simplify the types of capital assets, how long you hold them, and the tax rate you might pay. So when it comes to types of capital assets, so capital assets are things like stocks, real estate, or investment that you own. So when you sell them, you can either make money. So this is called capital gains or lost money capital losses. So holding period. So the holding period is like a timer that measures how long you own a capital asset before selling it. So these are the two categories based on how you held it. So short-term capital gains or STCG. So if you own the asset for a year or less more than selling it, it's considered a short term. So from the long-term capital gains or LTCG, if you held onto the asset for more than 1 year before selling it, it's considered a long term. So for the tax rate, so short-term capital gains. So if you made a profit on asset you held 1 year or less, the tax rate you pay is similar to your regular income tax. So this can be high as 35% of your gain. So for long-term capital gains or LTCG, if you made a profit on an asset you held for more than 1 year, the tax rate you pay depends on your income level. So if you're in the 10% or 15% income tax bracket, you might not have to pay any tax on your long-term gains or 0% tax rate. So for most people in the 25%, 28%, 33%, or even 35% income tax bracket, the tax rate on long-term gains is 15%. So in simple terms, if you sell something you own for a short time and make profit, you pay taxes on that profit of your regular income tax rate. But if you hold onto it for a longer time and then make profit, you might get a lower tax rate, especially if you're in the lower income tax bracket. So next slide. Schedule E, rental and royalty income, income from partnership, S corporations, and trusts. So first, what is Schedule E? So Schedule E is a part of tax return where you report income from few different sources. So rental income is the money you earn from renting out property like house or an apartment to tenants. So royalty income, so this income you get from letting others use your creative works you own, like books, songs, or patents. Income from partnership, so if you're part of a partnership or a business with multiple owners, you share the partnership's income is reported here in income from partnerships. So income from S corporations, if you're a shareholder in an S corporation, your share of the corporation incomes goes on Schedule E. And income from trust, so if you're a beneficiary of a trust and receive income from it, that income is reported here in income from trust. So rental and royalty income, so rental income, when you own property and rent it out to others, the money they pay out is your rental income. So it could be a house, apartment, office space, or any other type of real estate. So royalty income, if you created something like a book, song, or invented something unique, and you allow others use or reproduce it in exchange for payment, that payment is your royalty income. So who uses Schedule E? Many people who work regular jobs and have rental properties or receive royalties will use Schedule E to report this additional income. So if you're part of partnership, an S corporation, or receive income from a trust, you also use Schedule E to report your share for the income from these sources. So next slide. Schedule F, farm income. So what is Schedule F? On Schedule F, farmers report the total income. So this includes money earned from selling crops, livestock, and other farm products. So farmers also deduct their farm-related expenses. So these expenses can include things like buying seeds, animal feed, and any other equipment or maintaining the farm. So the difference between their total income and their deductible expenses gives them their taxable income from farming. So farmers may also be eligible for various tax benefits and deductions that are unique to agriculture, such as special depreciation rules for farm equipment or deduction for conservation practices. So Schedule F is a part of tax return specifically for farmers. So it's used to report income earned from farming activities and deduct related expenses. So the tax code has special provisions for farmers because of their important role in food production and the economy. So kapag farmer ka, filling out the Schedule F accurately ensure that you pay the right amount of taxes and take advantage of tax benefit available to you as a farmer. So next slide. Other taxable and non-taxable income. So taxable income. So taxable income is the money you earn or receive that is subject to income tax by the US government. So here are some examples of taxable income. So first, alimony. So alimony is the money paid to you as part of a divorce settlement. So next is state or local tax refund. So if you receive a refund of state or local income taxes you paid in a previous year, this refund might be taxable in certain situations. Next, retirement and fund distributions. So money you take from individual retirement accounts or IRAS and pensions when you retire. Unemployment compensation. So if you receive unemployment benefits, so this income is generally taxable. So next is a portion of social security benefits. So depending on your income and filing status, a portion of your social security benefits might be subject to income tax. So non-taxable income. So non-taxable income is the money or benefits that you don't have to pay income tax on. So here are some examples of taxable income. So first, welfare benefits. So government assistance programs like temporary assistance for needy families are typically not taxable. So next is interest from most municipal bonds. So interest you earn from bonds issued by the state or local governments is usually tax exempt. So next is most gift. So money or property you receive as a gift generally not considered taxable income for us. So although there are some exception for very large gifts. So next is inheritance and bequest. So inheritance and gifts received through someone's will are typically not taxable for the recipient. Next, workers' compensation. So payments you receive due to work-related injury or illness are usually not taxable. So next, veterans benefits. So benefits provided to veterans such as disability compensation and pensions are often not taxable. So next, federal tax refund. So it is if you overpaid your federal taxes in a previous year and receive a refund that and that refund itself is not taxable. So last, some scholarships and fellowships. So certain educational scholarships and fellowships used for qualified educational licenses may be tax-free. So it's important to note that tax laws can be changed over time, and there may be exemption or specific condition that apply to different types of income. So next slide, deductions, exemptions, and credits. So one, deductions. So think of deduction as special discount that reduce the amount of your income that you have to pay taxes on. So here's how they work. Deductions can be for specific expenses or specific expenses or situation that government believes you shouldn't be taxed on. So for example, there are deduction for age and blindness. So meaning if you're a certain age or legally blind, you can reduce your taxable income. So for some expenses, you can choose between a standard deduction or a fixed amount set by the government, or itemizing your deductions. So itemizing means listing each expense separately, like medical bills, charity donations, or mortgage interest. So if your itemized deduction are more than standard deduction, it's usually better to itemize because it lowers your taxable income even more. So number 2, exemptions. So exemptions are like allowance that reduce the amount of your income that's subject to tax, and they're often based on your personal situation. So you can claim exemption for yourself, your spouse, and your dependents like children or other family members you support. So each exemptions you claim reduce your taxable income. So exemptions acknowledge that you have financial responsibilities and people who rely on you. So you should get a break on your taxes for that. So next, credits. So credits are like direct discounts on the taxes you owe. So they are different from deduction and exemption because they don't reduce your taxable income. They lower the actual amount of tax you have to pay. So if you qualify for tax credit, it's like getting a dollar for dollar reduction in your tax bill. So example, if you owe $1,000 in taxes and get $200 tax credit, you only have to pay 800 in taxes. So ayun, nabawasan siya ng 200 $200 kasi $1,000 yung $1,000 babayaran mo and nagkaroon ka ng 200 tax credit. So yung 200 tax credit ibabawas siya sa 1,000, so 800 na lang yung babayaran mo sa tax. Credits are often given to for specific things like education expense, childcare costs, or energy efficient home improvements. So they're meant to encourage people to do things that are good for themselves or the environment. So deductions and exemptions lower the amount of your income that's subjected to taxes, while credits directly reduce the amount of taxes you owe. So key takeaways. So the most relevant tax for financial planning is income tax. So income tax, as it affects the taxpayer over an entire lifetime. So next, different kinds of income must be defined and declared on a specific income schedule and are subjected to tax. Next, deduction and exemption na reduce taxable income. Next, credits reduce tax obligations. And the last, payments are made throughout the tax year through while withholding from wages or through quarterly payments.
Keeping, the individual filter must collect and report the information of tax form and schedules. Fortunately, this is not as difficult as the volume of data would suggest. Employers are required to send Form W-2 to each employees at the end of the year, detailing the total wages earned and tax and contribution withheld. If you have earned other kind of income, your client customer retire found Form 1099 to report that income to you and to the IRS. Interest and dividend income is also reported by the bank or brokerage firm on Form 1099. The W-2 and the Form 1099 are reported to both the IRS and you. So it says that the system of filling tax information has purposeful redundancies, where passable information is collected independently from at least two sources so it can be verified. For example, your wage data is collected both from you and from your employers. Your interest and dividend income are reported by both you and the bank or brokerage that paid them, and so on. Those redundancies, wherever particular, allow from a system or cross references so that the IRS can check the validity or the data it receives. Income may be summarized and reported to you, but only you know your expenses. Expenditure are important if they are allowed as deduction, such as charitable gift, medical and dental expenses, job-related expenses, and so on. So data should be collected throughout the tax year. If you do nothing more than keep or checkbook, then you will have to go through the identify and deductible expenses for the tax year. Financial software application will make that task easier. Most allow you to flag deductible expenses in your initial setups. You should also keep receipt of purchases that may be deductible. Credit or debit card statement and bank statement provide convenient backup proof or expenditures. Proof is needed in the event the IRS questions the accuracy of your return.
I am Princess G. Policiano, and now I am going to discuss the tax preparation and filing. After you have collected the information you need, you fill out the forms. The tax code is based on the idea that citizens should create revenues for the government based on their ability to pay, and the tax form follows that logic. So, in preparing tax and filing it, after makolek yung mga information na kailangan natin sa pagpe-prepare ng tax, which is na-discuss sa keeping record, magpipill out na ng form yung mga taxpayers or yung mga kanilang accountant or yung mga tax consultant. Yung tax or buwis na ibabayad nila is depende sa kanilang revenue. So, for example, if mababa yung sweldo mo, mababa din yung tax na kailangan mong bayadan since it's our ability to pay or to contribute sa ating government. So, the next sentence is, most taxpayers need to complete only a few schedules and forms to supplement their Form 1040 or 1040EZ. Most taxpayers have the same kind of taxable events, incomes, and deduction year after year and file the same kinds of schedules and forms. Dito naman, since international yung module na pinagbabasehan natin, yung Form 1040 is yun yung code ng form na pinipil outan ng mga taxpayers. Mostly, yung mga parents natin na nagwo-work or sapat lang yung sinasahod, kadalasan sila yung pare-pareho ng form na kailangang fill outan since yung taxable events, income, yung bawas or deduction sa sahod nila is pare-pareho lang. So, next slide is dahil Form 1040 yung ginagamit if international, nag-provide lang ako ng another sample form which is Form 1702. Ito yung form na ginagamit ng mga taxpayer dito sa Pilipinas. So, nailagay ko lang siya for everyone para ma-aware sa mga form code na meron ang Philippines. Next slide is professional tax preparers may be lawyers, accountants, personal financial planners, and tax consultants. If ever dumating na sa point na kailangan na natin magbayad ng tax, pwede tayo mag-seek ng advices sa mga professional na kagaya nila. Many tax preparation packages are available and many are reviewed in the business press or online. Some popular programs include yung link na pwede nating makita. So, these are the possible programs: TurboTax, TaxCut, Tax, ACT, Complete Tax, TaxSlayer Premium, TaxBrain 1040 Deluxe, OLT Online Taxes. In international, ayan yung mga softwares na makakatulong sa atin when it comes sa tax preparation. And yung mga nasa bullets, yun yung mga sample programs na related sa taxes. Following up, after you file your tax return, it will be processed and reviewed by the IRS. If you are owed a refund, it will be sent. If you pay the payment, it will be deposited. The IRS reviews returns for accuracy based on redundant reporting and its sense of your data. The IRS may follow up by mail or by personal interview. It may just ask for verification of one or two items, or it may conduct a full audit, a thorough financial investigation of your return. In any case, you will be asked to produce records or receipts that will verify your reported data. So, in explanation, pagkatapos daw natin mag-file ng tax return or pagkatapos mag-file ng tax return ng mga taxpayers, ipaprocess at ire-review na ng IRS or International Revenue Services. Dito sa pagre-review ng IRS, the taxpayers or the professional will know if ever na may refund sila na dapat makuha. If ever na meron is ipapadala or ibabalik naman yun ng IRS. It is based on the accuracy of our information or data. Natatandaan ko sa accounting subject namin before is na lesson to. Magque-question sila sa mga taxpayers. Hindi naman madami, pero mga 3 or 4 para lang ma-verify yung reported data or information na ginagawa or sinasabi ng taxpayers.
Relationship between taxes and financial planning. Learning objectives. Trace the tax effects of life stages and life changes. Identify goals and strategies that provide tax advantages. Identify tax advantages that might be useful in pursuing your goals. Discuss the relationship of tax considerations to financial planning. Tax strategies and personal financial planning. Tax obligation change more broadly as your stage of the life changes. Although everyone is different, there is a typical pattern to aging, earning, and taxes. You might anticipate significant changes in income or expenses based on a change of job or career, or a change of life stages or lifestyle. Not only may the amount of income of or expenses change, but the kind of incomes or expenses might change as well. Planning for those changes in relation to tax obligation is part of personal financial planning. Young adult, middle adult, older adulthood, retirement for their source of income, and then asset base, adjusted gross income, and deduction exemption. Dito yung pinapakita yung pagtanda ng isang tao and paano sila nakakakuha ng income nila and asset based on the table. In young adulthood, as you progress in your career, you can expect wages, expenses, and depends to increase. You are building an asset base by buying a home, possibly saving for your children's education or saving for retirement, because those are the kind of assets encouraged by the government. They not only build wealth but also create tax advantages. The mortgage, interest deduction, retirement, or education saving exemption. The tax consequences of such changes should be anticipated and considered as you evaluate choices. For financial strategies, because the tax code is a matter of law, it doesn't change, but because it is also a matter of politics, it changes slowly and only after much public discussion. You can usually be aware of any tax code changes far enough in advance to incorporate them into your planning. So, the generally you can expect your income to increase during your middle adult life, but that is when many people typically have dependents and deductions such as mortgage, interest, and job related expenses to offset increased tax obligation. As you age, and especially when you retire, you can expect less income and less also few deduction. Any kids have left home and mortgage is paid off.
Tax advantages are sometimes created for personal financial strategies as a way of encouraging certain personal goals. In the United States, as in most developed economies, certain goals such as home ownership, retirement, savings, and education and health financing are seen as personal goals that benefit society as well as the individual. Sa United States, kadalasan nagagamit yung pagbabayad ng tax for personal advantages. Katulad din siya dito sa Pilipinas na may ibang mga business or companies ang mas nagbibigay ng trust sa mga tao nagbabayad ng buwis. Anticipated events such as an inheritance, a gift lottery, winnings, casualty, and theft losses or medical expenses can also have tax consequences. They are often unusual events and therefore unanticipated and may be unfamiliar and financially complicated. In those circumstances, it may be wise to consult an expert. May mga pagkakataon naman na nakaka-experience tayo ng mga di inaasang pangyayari na may dulot sa atin sa financial loss katulad ng mga nabanggit. Your financial plans should reflect your vision for your life, what you want to have, how you want to get it, how you want to protect it. You will want to be aware of tax advantages or disadvantages, but tax consequences should not drive your vision. You would not buy a house with a mortgage only to get the mortgage interest deduction. For example, however, if you are buying a home, you can plan to do in the most tax advantageous way. Dapat, yung financial plan mo, akma sa kung ano yung vision mo sa buhay. Dapat alam mo kung achievable ba yung plan mo. Not only based sa kung ano yung gusto mo, pero din sa kung ano yung kakayahan mo. Dapat din may alam ka sa tax since katulad ng mga nabanggit, may advantages at disadvantages siya. Mas madali mong malalaman kung ano yung nararapat na plan kung alam mo yung magiging epekto ng tax sa plano mo. Yun lang po and thank you.